Hi guys, welcome to today's webinar. My name is Mark Shawson, the Pattern Trader. Let me just share my screen with you guys. So welcome again to the webinar. Let me just kind of put this in webinar mode. Welcome to the third of, I think I took the third of the 4-day live execution series program, how to identify monster moves in the market. My name again is Mark Shawson, the Pattern Trader. So for the last couple of days, I've been telling you that to my mind, price is the news. Price is ahead of the information. All you need to understand is the news. And now I'm going to show you something that to my mind validates, everything that I'm trying to explain. So you can see this is a live chart right now. You can see the ticker symbol is BYND. This is the company Beyond Meat. The company closed at $94 today, down $3.58. And you can see it's down $13 in the aftermarket after the release of its news. Now, there's no way that I could understand or know the news, but I've been telling our members to sell short Beyond Meat for months and months and months and months in my belief that this is eventually going to be a $50 stock, $60 stock, $70 stock, what have you. And you can see that we are well on our way there. So this is, again, validation that price is ahead of the news. So ahead of today's news release, I started putting put options. So you can see that this is a put on Beyond Meat. I did the 80 call puts, which, slightly out of the money now, and the 90. So if the stock is trading at roughly $80 now, I'm $10 in the money, and these calls are worth $250,000. Yes, so that's not a I didn't stutter. That's a put on 250 shares, but you have to multiply that by 100 because each put's based on 100 shares. So that's really a put on 25,000 shares. And right now the stock's down $10 in my favor. And so those puts are worth $250,000. I also had 150 puts in this account. So those are worth 150,000. So all told, this move right now, if it stays here, is worth about $500,000. Now, the frustrating thing is I'm watching the market now, but you can't undo these options until the market reopens tomorrow. So what we're seeing now is the aftermarket. So you can see that the stock is actively trading, and my fear is that it's going to trade higher from here by the time I'm looking at it. And you were talking about several hundreds of thousands of dollars. But frankly, I could expect this stock to crater from this price. I wouldn't be surprised to see this in the 70s in the not too distant future here, like in the next half hour. I'm hoping that we're going to see a 70 print, and eventually this is going to go a lot lower. The thing about options, these options expire on Friday. So, whatever the move is tomorrow and Friday, then I have to take it. I'm also short 1,500 shares, and so that's worth another, I don't know, $30,000 based on this move right now. But this is again an example of how I get positioned based on just price information. I've been talking to you guys about Beyond Meat all week. Yesterday, I sent out an email to our members saying that you should basically reload. I was already short Beyond Meat. You can see right here at 99.11 on November 7th. This is kind of how I advise our members to manage their positions based on what we've done in the past. And you can see that we were short at $99.11. Right now, the stock is trading $20 lower at about 80 bucks. So if you took that and then I said double up and sell it on a print below $96.20 today, which it clearly went through. And so now, and I said in this thing, I'm personally long BYND put options, the 90 put options, and I added also the 80 put options. This is, kind of my service, how I alert members to what I'm doing. And so this is what we were looking at. So all this week, I've been talking about BYND. Let me just keep an eye on it. So now we're in the 7s. We're printing at a 79 handle here. And frankly, I wouldn't be surprised to see this go into the 6s. I expected that we were going to crater today. And that's what we're seeing. I think you're going to, absolutely get decimated in this stock. I've been saying this since the stock was at $200. There's just been a history that I've been watching in this stock that, to my mind, there is no mystery about what is happening right now. So to me, this is the greatest evidence of how just the study of price information puts you ahead and in position to capitalize on monster moves in the market. And so this is a life history, a weekly chart. Each one of these price bars represents 1 week and beyond meat. And I've been looking at this, very bearish price history. So here's a head and shoulders. It looks just like a man or woman's left shoulder. The peak is the head, and now you have a head and shoulders there. And now in the more immediate time frame, you also have a double top and another head and shoulders. So you have this left shoulder, the peak, the right shoulder, perfect. So you have the double top, you have 2 peaks in the same area, and the head and shoulders. All was connected by this neckline. A neckline is simply a line that we connect throughout the entirety of the pattern at the 113 level. And frankly, when it cracked through 113 there, that's when it was all over. There was some fake outs, there was some distraction, there was some fun. But to my mind, that was when the gun was fired and that this thing, was ready to go. And so you can see last week or 2 weeks ago, we had this, what I call key reversal, where the market made a new high, closed at the low. So I use a combination of patterns and price action to put me in these moves. And so I fully anticipated, that we basically a couple of weeks ago, we cracked through the secondary support. You can see that today we closed right underneath there. And now we're trading, here. And I think, we're going to go back to these lows at $40. I've been saying that since this stock was 200, that this was a $40 stock. If you've been on any of my webinars, if you've, get any of my emails, I've been telling our members to sell, 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 sell all the way down here. I have literally made millions of dollars personally on BYND, stock, put options, what have you. And so actually I bought some calls right there and made 7 figures on that counter trend move. So I will take advantage of, moves that go the other way, even though I thought the bigger trend was lower. But that's a discussion for another time. So this is, prima facie evidence of how you can just look at an objective chart and understand where prices are going to go. So, Mike, this is neither an option class nor a Forex class. This is a class on how to use empirical price information to take advantage of monster moves in the market. So I'm not looking to take out $1 here or $1 there. I'm looking for setups that are going to translate to $5, $10, $50 moves, make tens of thousands, hundreds of thousands of dollars on a particular move. So this is what I'm looking for in my trading. I'm looking for setups that are going to give me indications of big moves in the market. So, if a market's going to go from 160 to 70, why would I be interested in getting in and out every day for a couple bucks? This is what I'm looking for on my trades. I'm not really a genius, but thank you for that. I basically, and I'd like to think of myself as an observer. I just observe what the market's telling me. and try and get in sync with that observation. So where are we? So now we're at 78. So this thing is down $16. I don't know what that is in percentage, but it's a big percentage, probably 20% move almost in about half hour. So the market closed at 45 minutes ago. Company announced its news, and this thing is down almost 20%. So, I think that, this thing could print in the 60s or the 50s. I would not be surprised. I've been saying that this is going to be a $40 stock. You're going to come back to this $50 level at some point. And I've been saying it here, 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 and here. And so, again, this is all you need. And you can see I have nothing on this chart. There's no magic indicators. There's no MACD. There's no Bollinger Bands. There's nothing. There's nothing but price and time. From this very simple picture, I can extract literally millions of dollars out of the market. And I do. So this is, again, just evidence of what you can do in the market. So here is my FX trades. So I told you about the pound New Zealand. I'm in short pound New Zealand. And then I got long gold over the weekend at 18.19. It's trading about 18.50, and I'm making about 86 grand on that position. So I'm making about 133 grand on my FX positions today. So again, we talked about pound New Zealand, that it was in this kind of downtrend, probably go back to the 185 level, 186 level. And that's what we're seeing in the market right now. So I talked about how to look at patterns and price action. So this is a great example of how you could actually add to your trade. So I'm already short, but if you're aggressive, as I am, I add to my trades based on additional price information that tells me how to get in sync with the trade. So Beyond Meat's making new lows at 76 now. I hope to see this in the 60 handle by tomorrow. So anyhow, I bought these 80. So when the stock was trading at $98 yesterday, I took a shot. I took a thing that this thing was going to crater, and I was buying these 80 put options for 44 cents. So you can see these 80s, they close at $1.10. Today. I bought them at 44 cents. So I was looking at a triple on the close today, and I'm sure after today, they're probably trading at $4 or $5. So those options that I bought for 44 cents could be trading 10 times higher right now, and perhaps much higher by tomorrow. So this is how you kind of leverage big moves in the market. So I bought this way out of the money put option. The stock was trading at 98, $18 out of the money. I had 2 days, for it to expire. These expire November 12th on Friday. And I took a bet that this thing was going to crater, started buying these 90. I bought the 90s for about $1. You can see they closed at 3. So I'm making 300% as of today. Now, these 90s have got an intrinsic value of at least $13. So I paid $1 and they're worth 13. So that's how I look to, leverage these moves when I see a big move in the market. So I just hope that Beyond Meat sticks around for tomorrow. So here again is the double top head and shoulders in the pound versus New Zealand dollar. Now, what you'll notice is that the right shoulder sits below the left. So you've got this down-sloping neckline. So typically when you get a head and shoulders, you have, a horizontal neckline. But this is down-sloping because the right shoulder sits below the left. And the implication of a down or a drooping neckline is that this thing is going to go down and go down very quickly. So that, the implications are very bearish. We have the double top, the head and shoulders. So that whole pattern is a bear price pattern. It tells you that prices are going to go lower. So once we understand the pattern, then I just look for times to get in sync. So I'm already short, but I'm going to add to my shorts tonight. So you can see today we had this key reversal, made a new high for the day, but by the end of the day, we closed right on the low or very close to it. So the sellers were in control in a market that's going down. So now I'm basically going to look to add to my trade by putting a pending order, a sell stop right under this low, and I'm going to put my stop loss right above here and look to take this for another ride on the downside, because I do expect prices to go back to that 185, 186 support level, another 300 points lower. So, this is how, I do add, I've already got 2 positions short. You saw that. One at 191.97, one at 190.61, and then I'll add onto today's low, which is, looks like around 189.70 or something. And so I will keep adding. So now I'll have 3 positions, so that if this thing goes to 186, I'm going to have 3 positions coiled to take out, hundreds of pips in the market. So I'm not I'm not looking for 7 pips here or 30 pips there. I'm looking to take hundreds of pips out in the market. You can see this has dropped from 197 to 190. That's 700 pips already. And I think there's at least another 500-600 pips to be had on the downside. So I'm looking for these monster moves in the market. And that's how you make money in the market. You don't make money darting in and out like a squirrel hunting for nuts, trying to take 7 pips here and 20 pips there and trying to beat your broker, because the spread will, basically chew you alive. So I'm just keeping an eye on this Beyond Meat as it keeps cratering. I would love to see this thing in the 60s and the 50s today. Make $1 million on this move. So this is basically an example of, again, a picture, a pattern, price action, trade execution. And this is how I take advantage of moves wherever they occur, in the Forex market, in the gold market, it doesn't matter. Anything that has a chart. Here's the gold chart. Over the weekend, told our members to get long gold right above this key reversal. And you can see that prices are about $30 higher right now. So, I basically observed this long-term support line, and then all of what I call this key reversal. The double bottom here, made a new low, close at the high, 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 made a new low, close at the high. So all of these things are pointing in the direction that gold wants to go. So I just, look for a way, for the market to tell me when to join it. So basically, I sent out an email over the weekend, buy this thing, on a new high around 18.19, and you can see now we're trading at 18.49, $30 higher. So I would take some profits right there, and just let the rest ride. So Janet says, I just made $50 on gold yesterday. So good on you, Janet, and you are welcome. So Jason says, can you modify positions, take profit to take advantage of what you expect? Yeah, so I keep modifying. So when I, what did I say on my email? I said, put a take profit at 67. So I had a stop loss at 98 and a take profit at 67. And, that may just get taken. I hope it doesn't. That was probably just too generous, because I expect this thing to go back in the 50s. So let's say, this thing doesn't get taken out. And there's a good chance that it could, in which case you've made $30 on that stock overnight. I don't think you'd be too unhappy on 2 positions. So, but frankly, what I do is my take profits are pretty arbitrary. So what I'll do is I'll just stick a take profit in at a place where I don't really think that it, will hit. But in this case, it could. And if it does, that's a very nice profit. But let's say tomorrow, we go down and, we settle at 72. Then I'll just move the take profit lower. I won't stop it from making me more money. And frankly, if, you have a position, I would just let this thing go. You could get out at some at 67. It wouldn't be bad trade. Get in at 96 and get out at 67, make 30 bucks on that trade. But frankly, I expect this thing to keep plummeting. This whole thing is a distribution. Everybody's been getting out. And so there's nothing to hold this thing up. It's just going to plummet. So I've been saying this forever. And, I basically said on the observation of this double top, I said it's over. And then, the market always has these, little dipsy doodle fake outs along the way. And that's the test, of a trader, is that we see these things, but, the market takes its sweet time, to getting to its own destination. But the destination for me is never in question. This basically told me a while ago that it was over right there. This is just all noise. So Phil says it's been a long wait. No, I've been shorting at every piece of this thing, down. So I've been taking some monster cuts out of this thing. So to my mind, to me, that's what the patterns are. The patterns are a cheat sheet. So when you see this basically tells me, which way to get faced. So that every time this thing goes higher, I just sell into it. Why? Because this is my trading for dummies cheat sheet. So once the pattern tells me which way to get faced, then, I know how to get in sync with that market. Even though it takes a long time, I just basically use that as my guide. So every rally now, I just short into it. So Joe says, thanks, Mark. I'm with you. I took the 90 puts at 160 based on your last Monday recommendation. So Joe, maybe in my boiler room. So every day we examine these things and, Joe, good on you. Those 160 puts now worth at least $11. So I just hope it stays this way by tomorrow and we don't have a rally in between now and tomorrow. So that's the frustration with these options, is that you can't get out until a regular market session. And so these, aftermarket and pre-market moves, they go all over the place. And, who knows, this could be back at 90 by tomorrow morning. I don't think so, but, we'll see. So Disney is lower in the aftermarket. I thought Disney was going to go lower. Disney's been trading in this kind of descending trading pattern. So this is Disney. I didn't play this because I was so loaded up on Beyond Meat, but basically Disney's in this bear price pattern. You can see this descending wedge, and now Disney kind of is trading underneath here at 168. But that could be a sneaky little buy because, I think that this guy right there is standing sentry, so that, there could be a sneaky buy somewhere in here. But right now, the preponderance of the weight of Disney has been, these lower highs. So now after earnings, Disney dropped about $6 tonight after its earnings announcement. How's Lyft looking? So Lyft would have gotten stopped out. I talked about Lyft last night. I said put a $2 risk, and the stock market got whacked today, which was not surprising. The stock market's been going straight up, and so Lyft had this key reversal, went higher, and then so big deal. You take a $2 risk on a 0.5%, doesn't work out, you move on and go to the next thing. So right now that these kind of key reversals are pretty nasty. I don't like to fight them, but like I said, I don't look at a reversal in a vacuum. So now lift is pretty complicated. So now I'll just see how prices react within this resistance level as to whether this is, a long-term descending triangle. We just got to the top of it, and now we're gonna, head lower, or, do we just consolidate it? So once I see this key reversal, that's typically a bear thing, in which case I would expect to see prices go that way. But if prices kind of find a way to kind of dig in and, they consolidate around here, then at some point, it'll be a buy again. So I just look at how prices react at key levels here, and I let the market be the referee. So that one didn't work out. But, I had plenty that did. I've been quietly long the call options in MMM, and they expire on Friday, but this kind of looks pretty good. So this is the stock MMM. I have the 182.5 call options, so I'm right at the money. So I've got till Friday for this thing to get going. But what I was looking at in Triple M is this double bottom here, and then these key reversals. Made a new low, close at the high, and today you made a new low and close at the high. So basically, I would just test the waters tomorrow, put in a buy stop right here above the high. The high today was 182.84, so you could, put it at 182.95. Put your stop loss, a buck or two lower, risk $2, and who knows, you could have a nice trade. I got long the call options, show you. I'm still losing some money, so you can see that the time value starts eroding these options. So if you're going to play this options game, you have to be prepared to lose all of your money. So here are the call options that I bought. How many did I buy? I bought a lot. And I'm actually a little bit down, even though this thing moved up today. That's the, so you can see I bought the 182.5 calls that expire on Friday. So the premium is 123. So you need to add 123 on top of 182.5. So this thing needs to close at least 183.80 for me to get back my money. I'm still down about $4,000. I put about 44 grand into this thing. So I need to see this thing move higher. And hopefully that key reversal indicates that, we'll get out of this thing tomorrow. So, sometimes I'll use calls to take advantage of a move. So Sun says, if you take a trade and it starts to consolidate for a while, do you consider to close the trade? Not really. Trades take a while. You can see that this thing's been marinating. This trade's been kind of, first off, to my mind, when trades come straight down, even though I see a bottom, it doesn't mean that it's going to go right up. I always talk about this concept of spacing, that the market kind of needs to build space away from that wall to kind of create a way for it to go back the other way. And so this has been what I'm looking at. To me, this is the governing pattern. And the frustration with calls is that, I'm probably going to be right about the move. It probably will eventually move higher. But if it doesn't happen by Friday, I could lose, some or all of my money. So with options, you can be, right about the move and, wrong about the timing. But you can see that, to me, this bottomed a while ago. And just because it's been consolidating, to me, this consolidation is just a series of inside bars, just a coil, a building of energy. And the energy is probably going to unleash in the direction as indicated by the pattern. So no, I don't just jump out. I look at the pattern, and to my mind, if it hasn't violated the pattern, to me, this is just, you can see all of these kind of key reversals here. Made a new low, close at the high, made a new low, close at the high. And so all of these guys, to my mind, are pointing in the direction that this thing wants to go. but you know, it's been doing nothing. So if you're watching this, it's like watching paint dry. But to me, it's just building and building energy. It's like rocket fuel to just send this thing, you know, higher. So I think that, you know, we could have a pretty good move tomorrow, even though the stock market collapsed today. This thing behaved very well. So I kind of very much like the price action there. Sorry, I'm just keeping an eye on this Beyond Meat. It's trading at 79. I want it to just stay under 80. Mohammed says, what is the effect of tomorrow, Veterans Day, on the, I think the markets are still open. So probably no effect. It's not a bank holiday. It's not a holiday. So probably will have no effect. So this is the principles that I trade everything under the sun. You can use this to trade commodities, stocks, Forex, oil, gold, what have you. It's a four-step layered approach where I kind of look at what is the trend, what is the pattern. Then I look for what I call my insurance day bars, these key reversals, or these narrow range or inside day bars, and then layer it with an execution. So the way I would just look to do is I'd look for the market to confirm this. So I put a buy stop slightly above the high, and if tomorrow we go lower, then you're not put in this trade. On the other hand, if this thing does make a new high, at some point, I do think it's going to get out of first gear here and get above this 184 resistance, and I'm hoping that it's going to be tomorrow. I hate to hold these into Friday, but based on the way this is looking, I would probably hold a good portion of them into Friday, because I just think that it's not a question of if, but when this thing's going to break out. Are there any questions on my trading methodology? In a moment, I'm going to offer you my book, in which it spells all of these steps out very clearly. The nice thing is it's a pay what you want, so you can pay anything you want for the information. So Phil says, do I like Lucid because they're bringing out more reliable cars than Tesla? I don't think in terms of that, whether this is a better car or what the Fed is doing or what the inflation number was today. This is all I look at. This is all I look at. I don't care about all of that stuff. I don't even know what this company does. I don't know why this is, okay, here we go. This is all I look at. I don't know what it does. I don't know what the PE ratio is. I don't know what the management is. This is all I look at to make a risk. So to me, trading is all about risk and reward, and it's understanding your risk. So to me, trading is, everybody thinks, well, how much I'll make if it goes up. But to me, the reason why I choose to do a trade is if the risk reward is going to be in my favor, and if I can identify the risk. So you can see this has been in a very narrow, confined thing. I think that this has indicated that this is a buy. And so now I can understand my risk. If I get in here, that my risk is very small, that if I can buy it there and risk there, this is my risk, and who knows where this is going to go. Where it goes, what time frame, how far, these are kind of the unknowables. But if I can get in understanding that I've got a small amount of risk for a pretty big outcome, that's all I care about. I don't care what's going on in the economy. I don't care if inflation is transitory or not. I don't care what Jerome Powell is going to do tomorrow. I don't care if Lucid makes a better car than Tesla or Rivian or whatever the new company that just came public today. I don't care about any of that stuff. This is all I'm looking at. I just, I'm making close to $1 million today on a picture. I don't know how much their sales are. I don't know what their meat tastes like. I don't know, they've got strategic relationships with McDonald's and Yum Brands. And every day this company comes out, Beyond Meat, with a new great announcement. They made a strategic partnership in Ireland 2 weeks ago. Then they did something with a lunch program in Canada. Then they did something with McDonald's. Then they did something with Yum Brands. Every day they come out with a new announcement, how great they're doing. And yet price is telling me something completely different. So, this is a great example where news comes out every day. I can probably go and find some news story. So here you go. Here's some great news story. CEOs of plant-based foods driving explosive revenue growth, blah, blah, blah. Here's Beyond Meat. Plant food based are driving explosive growth. And you read this and you go, wow, how can I not be in this sector? And, how can I short a stock? I mean, they got explosive growth. They're doing strategic deals with McDonald's and Kentucky Fried Chicken and Canada and Ireland and whatever. And yet every day it's just a slow drip down. So the news comes out and, I've called bullshit on everyone. I remember there was a news and, if you're in my morning program, I actually said the word that there was some strategic announcement that came out there. And I said, this is just bullshit. You just got to sell into that. And there you go. So this is all I look at. I don't care about somebody makes a good car or this company makes the best burger or, that people are moving into green. All I look at is what is price telling me? Price is down. That's, everything else is just a conversation. So Daniel says, when you look at the inside bar, do you care about the color of the previous bar? No, I don't. So to me, you can see here's an inside day bar right there. And an inside day bar, by definition, the range from high to low sits within the range of the previous day. So I don't care where the inside day bar closes. What the inside day bar represents to me is a storing of energy. So it's like that beach ball. Like if you put your hand on top of a beach ball and, put it, further and further in the water, and then you take your hand off, what's going to happen? It's going to, uncork. It's going to, the energy is going to explode. In this case, it's going to explode to the downside because this is a bearish chart. And so it doesn't matter what color the inside day bar is. Here was a blue inside day bar. And this is exactly where I said short it yesterday. So we had an inside day bar right yesterday. So I think, where's my email? I said penetration below the low of the recent inside day bar will very likely send prices careening lower. This was yesterday at 96.20. So this is what I said. So the low was whatever, 95, 90, well, I don't know what it was, but I said, just put a sell stop right there. And you can see the market opened higher. And if it, kept on going higher, then you're not put in the market. But at some point, the market just crashed through that, put you in the market, and now you're into a $15 trade or an $18 trade from a very simple inside day bar. And you can see it was blue. So it closed on the opposite side. It was just a fake out. So I don't care what color it is. All it does is that it represents a storing of energy, and then the market's just going to uncork out of that, which is exactly what has occurred. Here's an inside bar. You can see that bar resides inside that. And so once we understand what the relationship is, then I simply just put my sell stop under there, put my sell stop under there, and let the market just put me in these trades. And now the market's down here at $77. Mim says, what's the requirement to get the emails? Our team will get in touch with you after the 4-day series, Mim, and alert you how to get involved in our elite program if you care to. So that is basically it in a nutshell. So Beyond Meat is now making new lows. It's in the 76 handle. So hopefully we'll be in the 60s by tomorrow, or even the 50s. I wouldn't be surprised to see this thing just go off the boards. And I have I have 400, 600 puts. That's 60,000 shares. So, you know, if this crashes, $40, that's $2.5 million. All right, guys. So I'm going to now share with you my book, and it will explain in more detail. Dwight will put a link in the chat box here, and it's again, this is my 5-step execution plan that I've been talking about all week. And the great thing is all the sales, whatever you decide. So this is a pay what you want, right? So you hit this button and you pay $5, $10, you name your price, 20, 100, and whatever you decide to pay for the book, I will double that and send it to the American Childhood Cancer Organization. So I think I've donated about $35,000 so far to this, great organization. And so, not only do I not make any money from our book, it's a loser because I double the amount of whatever you donate for the book, and then I send it to a great charity. So it's really a twofer for you. Number one, that you're going to get some great information. Number two, all your money's going to charity and then some. And so it's basically pay what you want, and it will give you an insight into my 5-step execution plan that I've been talking about for the last couple of days. So Jill says, that's awesome. Yeah, Elena said it's a win-win situation. So that's really it. So, I always wanted to give back. I basically do this business as a hobby of giving back. I make far more in my trading than far more than I make in doing this business. I just like to meet people, and people always ask me, why would you do this if you're such a successful trader? And it's a valid question. I suppose if I was sitting at the other side of the fence, I would be asking that too. I've been doing this for more decades than I'd care to remember. And yeah, I love trading the markets, but it's, you sit in front of a screen, you watch numbers all day. It's, there's not a lot of interaction. And so when I started this business, I didn't realize, but I actually inherited a second family. So I've known people who've been in my programs for 4 or 5 years now. And sometimes, people come through South Florida. I just had a member who was one of our first members, Prashant. He came by through South Florida with his family on the way to Orlando last month. He asked me if we could meet for coffee. So I met him, and so it's just awesome, just meeting people from all over the world, and hopefully I've been able to help in some small way. So I enjoy that. And then I decided that every book, so I have 5, 10 books or whatever, we're coming out with a whole nother series of books that you'll be alerted to. All of that money, whatever you pay, I double that and send it to charity. So it's, when I say I want to give back, that's, I really do that. So Joe, contact our team about that. I don't, do any of that stuff. So here's our, I'll just make it to everybody. This is our support I'm just the front guy. I have a whole team doing everything else. I don't know what they do. I don't know how they do it. If you get in touch and share your interest, Joe, and we'll see if there's a fit. So Jason says, I've got Mark's books. It's a great resource at hand. He's honest and genuine, doesn't win every trade, and shows you that the wins can easily outweigh the losses. I've tried other systems that just don't work long term. Yeah, so this is not about, so I lost on Lyft yesterday. Big deal. I lost, $2 on Lyft, and I'm making $30 on Beyond Meat. And, also, there are certain trades where I put a lot of resources into one trade. And I'll put like a 0.5% risk on Lyft to see if that works. So it's not, I think I showed you that the risk reward is such that you don't, if you've got, I'm making what? I got short at 98. This thing's at 76. Plus I got options. I'm making whatever, 10 to 1 on this trade so far, which is very different than what most people are doing, where, they're trying to make 7 pips 5 times a day and risking, 10 pips to do that. And, that way, you've got to be correct on 90% of your wins. If you can set up a trade where, you risk $2 to make 6, that's a 3 to 1 risk reward ratio. And even if you lose the 2, if the other ones win, now you're winning 3 times as much as you're losing. And so you can actually lose 72% of you. So, to me, the win-loss ratio is an irrelevant statistic. I remember when I was, managing money, that was the first thing people would ask me, what is your win-loss ratio? And if I told you 90, 80%, 85%, you'd be like, wow, that's pretty good. I'll go with you. But if I told you it's like 37%, you go, well, that doesn't sound very good. I'll go and check out the other guy. But, on the 37% I win, I go ballistic. And then it's really the quality of your losers versus. So if I lose $2 on Lyft, which I did, and I make, $25 on Beyond Meat, and my bet is twice as big, you can see that, I could have 5 out of 6 losers and still be, if I had, lost 5 Lyfts and I lost $10, but I made $25 on one trade. So, I lost 80% of my trades and still am a big winner. So it's all about the quality of your wins versus the quality of your losses. So it's the old adage, keep your, losses short and let your profits run. Phil says, do you think gold will continue to go up? It's a good chance that it would. I would take some profits in here though. Gold's just been quirky and, every good move, but I think that it looks like it should go up. So again, Natalia asked, the inside bar, the color of the bar, it doesn't really matter where the inside bar closes. The inside bar, just to me, represents a coiling of energy, a storing of energy. So, it doesn't really, so, what I care about is the key reversal. So when I look at something like this, makes a new high, close on the low. So that's, that's where the close is very important. But on the inside day bar, sometimes you can get a misdirect where it closes on the high, but this is really the guy that's telling you what's happening. And then if it's in a downtrend, so I don't look at these bars just in a vacuum. I look at, what's happening. What is the preceding price action? So this all started right here with the pattern. So once I understand the pattern, so here was a head and shoulders with a drooping neckline, just like pound New Zealand. So you can see this drooping neckline where this right shoulder is lower than the left. So it creates this downsloping thing. So this, suggests that this is not only bearish, but it's going to go very quickly that way. So all the way up there, I was already anticipating this. So the patterns tell me how to think about what's coming at me. So even when the market moves higher, I'm selling into those rallies because this guy's told me what to do. So now once, the market's on the way, we know our pattern, we know our direction, and then we see the setup where I have my key reversal bar. I don't really care where that closes. I will still put my sell stop underneath here. And if the market takes off and goes that way, then I'm not going to, be hurt. But on the other hand, if it goes up and then comes down and it hits me, then I'm put in the trade. So it doesn't really matter, where this inside day bar closes. You can see that this closed slightly higher yesterday. This was just yesterday. And, upon that, looking at that email, I sent out that email last night and I said, just put your sell stop right underneath this low. And you can see the market opened higher and, you weren't triggered and you could have gone about your day. And then at some point, the market hit that, a pending order. And now you're put into a beautiful trade where, Beyond Meat is trading at 76.50, down from 94.50. So we're down, whatever, my math's terrible, $18 in, an hour. And I expect this thing to go into the 60s and maybe in the 50s. So it was all based on this pattern, direction. I don't care. The company came out with so many announcements that were bullish. But all I care about is price action. Paul says, do you use engulfing bars to indicate? So I don't use candlesticks. My version of an engulfing bar is this key reversal, where it makes a new high, close on the low. That tells me, that actually points. Here's another one, right at a double top. Made a new high, close at the low. And those actually point in the direction that the market wants to go. Now, you don't just trade all, reversals, in a vacuum. You have to understand what is the pattern, what is the direction, right? We see, because here was a key reversal. And yeah, you got a little bit of a coil out of here, but if you, took a few breaths, it was right back in your face. So just because the market reverses, yeah, you can get a little thing, but you got to understand what is the direction. So it's kind of putting it all together. That's what I try and do for our members. And if you're interested, this is what our emails look like. So this was just yesterday. And I show you exactly what I'm looking at. So the whole principle of what I'm trying to do is teach you to be independently able to make decisions for yourself without being in chat rooms, without listening to what the Fed's doing. Just look at a picture. And here was a double top here. Here was a head and shoulders here. And so I said, BYND has formed a double top and a head and shoulders bear price pattern. So once these price patterns emerge, they tell us this is a bearish price pattern, that things are going to go lower after the formation of that. And then, along the way, I try and find out, okay, where's a good point to join this trade? And so I look at these, key reversals inside day bars. And yesterday we had one. And I said, if it, goes below the low of that, it will likely send prices careening lower. And that's exactly what happened. The sell stop was triggered at 96.20, and now we're trading $20 lower in less than 24 hours. So with one email, you could, make back whatever it costs for this service. And I show you exactly what's happening on the chart. I write out the entry order exactly. So you could just copy and paste this if you want. The whole idea is to learn and then eventually be, independent of me. So basically I tell you, and look at this. I had a $2 risk on this. I said, put your pending order 96.20, your stop loss $2 higher. So now for a $2 risk, you're making $20. So that's a 10 to 1. So now you could lose the next 8 trades and still be a big winner. And that's my philosophy, is that I'm looking for the bigger moves in the market. So trade broke profile of 1%, Janet won. So basically, I showed you the risk calculator for FX. In stocks, it's, you have to kind of manually do it. So let's say you have a $5,000 account, right? And you want to risk 1%. Now, my math's not very good, but I think that's $50, right? So if you're going to risk 1% of your account, of your 50,000, that means that you're going to risk $50 on that trade. So if you've got a $2 risk, and I showed you that trade, your risk was $2, get in 96.20, get out 98.50. And your money risk is $50. That means you could do 25 shares. Does everybody understand that? So let's say you sold short 25 shares of Beyond Meat, went up, stopped you out, you'd lose $50, represents 1% of your $5,000, and you live to fight another day. So if you risk, 0.5% or 1%, you can't blow yourself out. It's just impossible unless you really don't know what you're doing. ER says, you also mentioned once a red bar close at the low of the day, it will probably continue lower. So again, I always look at these bars in context with the greater trend. So this is a downtrend, and it's also preceded by a pattern. So that when I see this red bar, as you call it, it's really what I call a key reversal, where it makes a new high and close on the low. I can understand that in context with the bear pattern, the bear trend, and that's likely to continue lower. So again, I don't just look at this thing in a vacuum. I don't just say, well, here's a key reverse. Actually, when I see something like this, when it's very large, this just stands out. And this is why I don't use candles. To me, these bars, I don't know about you, but I've been doing this for so long that this just catches my attention. When I see that, when I look at this whole chart, this just stands out. That just stands out. And it just tells me right there that this is it, that, it's very unlikely you'll ever see that high again. When I see that bar and I get short here, I get, like I said, to me, trading is understanding your risk. So when I get short here, I pretty much know that I'm never going to see that high. So I know what my risk is so that I can just sit in this trade because my risk is pretty much baked in the cake. And trading is really about understanding your risk. And once you can understand your risk, then you can sit in these things and make these big moves. Mim says, are you shorting the stock or the option? So in this case, I did both. I have a short position in this account as well as another account of 1,500 shares, and I have 5,000 shares in another account of the shares. But it's actually been pretty hairy to go short some stocks, even though I kind of felt like this was a no-brainer. And so the thing about options is you basically all you risk is what you put in the middle with your options. So in this case, I put up 25 grand, and this is now worth 150 times 15. So I put up 25 grand and now it's worth $225,000. So about 10 times. So that positions, and then that's, whatever. So, but, if it went this thing went, up $1 today, I would likely lose all of that money, $25,000. But the thing is, if you go short, sometimes it can get pretty hairy. And that's why I've been a little bit, I kind of use options if I want to go short, because, here's an example. If you bet the wrong way and you're short, you're going to lose, everything. So this was an earnings call on Avis, ticker symbol CAR, C-A-R. And here, I'll just put it up on this. It's easier to see. And, the stock just went haywire. So sometimes you get into these short covering rallies where if you get caught the wrong way, you'll lose your house. So that's why with options, you can only lose what you put up. But if you went short, CAR here, and there was a good technician, a good technical analysis that analyst that I respect on TV, and he was saying, yeah, this is a, probably this is, going to be it for this stock. You can see there was a double top here. And he was calling that, basically this thing had a lengthy run and it was likely over. And you can see what happened. They came out with earnings that went from $160 to $560. And so if you're short something like this, it's, called a short squeeze. You can, get your, what, caught in a ringer. So sometimes I will prefer to use options to take an earnings bet. And you really cannot control your risk on an earnings thing. The thing will open, and wherever it opens, you cannot control it. Natalia says, if you risk 0.5%, you will make 100 shares. So again, it's just math, Natalia. So if you risk 0.5%, so if you've got a $5,000 account and you risk 0.5%, that's what, $25? And so if your risk on the stock is a $2 risk, then you can do roughly 10 or 11 shares or something like that. And so even if you get stopped out, you've lost $25 of your 5,000 and you live to fight another day. M says, you don't want to be in a trade during earnings. Well, you do if you're on the right side. So I did bet on this thing before the earnings. I started putting on these puts a couple of days ago. I've been in these 90 puts for several days, and then I was waiting for this earnings event. So in this case, you do want to be in this trade during the earnings, but you don't want to be caught on the other side of it. And so that's why I was reticent to short the stock. Usually I would do a monster position in stock also. But in this case, I used options. And so Marco, you wouldn't be able to use a stop loss. You would be filled. So a stop loss becomes a market order once it's triggered. And you could have a stop at, 160 and get filled at 580. And, get a call from your broker that you owe them another 100 grand. So you better know what you're doing. All right, guys, I think I'm going to leave it there. We'll come back for tomorrow, circle back. So Daniel says, if you enter a trade on a daily turn and then see at the end of the week that the weekly bar is also, would you place another order? Yeah. Like I showed you, like in Pound New Zealand, I would, be aggressive and add, below today's trade. And then at the end of the week, if it ends bearish and you want to be aggressive, and, I think you're coming back at least to this 186, 185 area, possibly the 182. So path of least direction, look, you've already come down many weeks in a row. Probably need to just hang out here, but, you also have to understand that, the more you add into a trend. So if I put on a trade here, 193, and then add here, 191, and then add here, and my whole objective is to get out. So then, your objective on your ads becomes, less and less. Your take profit, because by definition, you're getting in at a different place. So what I do is I typically ladder. Like I might take a 2% risk up here, take a 1% risk here, take a 0.5% risk here. And that way you can't get hurt if it comes back against you. You're basically playing with the market's money. And you're adding when you've already made money. So you're not really adding more risk. Marcelo, we put a link to my book. Dwight, if you want to put the link back about the book, basically everything that I've explained is in the link that Dwight just posted. Download the book, pay what you want, and it will, I think, make everything that I've tried to explain a little bit clearer. All right, guys, have a great day. Hopefully I'll have made 7 figures by the time I speak to you tomorrow.
All right, Mark, see you tomorrow.
Thanks, Dwight.